What's up you guys, welcome back to the channel, Andre here. By now you probably realized that I really like real estate and there's a reason for it. It's probably like one of the best investments you can make in your life. So if you are a beginner to real estate and you want to know how to get started, this is the video for you. Just before we start, make sure you drop the thumbs up to help the YouTube algorithm and let's go. Before getting on the how, let's get on the why. See, the cool thing about real estate, guys, is the return on your investment. Most of my properties return like over 40%, which is insane. Like I could never get that safely in the stock market. I would have to be betting on hype stocks or stocks like that are climbing a lot for no apparent reason for me to get those types of returns. Now the difference is you will have a little bit more work as you have to manage the properties, you have to get tenants, you have to make repairs when there's damages. But honestly, it's so worth it that there's no reason that you shouldn't be in real estate. In some countries, you can even get tax advantages just by having real estate. For example, if you live in the United States, and you're a flipper, you don't have to pay capital gains on the flips. The way that it works is if you reinvest the money by using a 1031 exchange, you can literally reinvest all of it and defer the capital gains forever. Now, I'm not a real accountant, so always hire a professional to do your taxes, but yeah, that's how it works. Now let's get into the how. The number one thing that you have to focus when you're starting real estate is getting that down payment, okay? You have to accumulate a certain amount of money. It's not like a stock that you can buy a stock for like 15 bucks. You have to have a down payment to actually buy a property. This is not always the case, but it's the norm, okay? So you need to start saving money. For example, I have a couple of friends here that are always telling me, hey, I have to get in real estate like you, but then I call them and they're a Starbucks. Now, Starbucks doesn't make coffee less expensive, even though Portuguese salaries are way smaller than Americans. So actually a coffee in Starbucks here in Portugal is a small fortune. $5 to a Portuguese person is a lot more than $5 to an American person. But that doesn't mean that if you live in America, you can go to Starbucks. Now, I'm not telling you not to go to Starbucks. What I am telling you, you will have to save money. If you don't have money in your bank account right now, the problem is probably you. So start tracking how much money you spent, where you're spending it, and you will eventually start saving more and more because when you're tracking it, you actually see where it's going and you'll be way more self-conscious about spending on what you don't actually need. So start a new account. A high saving account is what I recommend, and start putting money into it, okay? Every time you get a paycheck, just put money, okay? This is my real estate money. I'm gonna get my down payment to buy a freaking castle so I can rent. Now the step 2 is to actually look into the market. You have to understand the market that you're trying to invest in. You have to understand the values of the properties. You have to understand the rents. You have to understand everything. How easy is it to rent a property? Is it better to do flips? Is it better to do rentals? It's all about the market that you are investing in. For example, the market in this city is completely different from a city that is like 30 minutes away. So just by moving 30 minutes, I will get a completely different type of real estate investing. So you definitely have to study the market. Go into your real estate websites, Zillow, whatever it is. Start looking at the properties in the market that you want. Now, if you're planning on doing rentals, I would recommend to do at least 1% a month, the 1% rule. Now, this is a rule of thumb, and basically it states that the rent of one property has to be at least 1% of the total investment that the property costs. For example, if a property costs $100,000 and you need 20 more to remodel it and like 10 more to actually carry it, like the buying costs, the credit costs, wherever it is. So that means that it's 130 if I did that math correctly. That means that the rent has to be at least $1,300. Now this is a complete rule of thumb and you don't have to obey it. Some people do 2%, some people do 0.5%. It actually depends again on the market that you are investing. So it's up to you to check your own market and understand what's possible. If you can get 2% properties, go for it. That's insane. Here I try to get for 1%. It's not always easy, but I try to, okay? So I don't buy anything that doesn't yield at least 1% a month, which means like 12% a year. Now the step number 3, and you should actually do this while you are looking into the market, is to get pre-approved for credit. You have to talk with every bank that you can, and you have to ask them, hey, can you guys fund my next real estate deal? And that's how it goes. And the reason why you should be doing this ahead is because this actually takes a lot of time. You have to contact a bunch of banks, and the best way to go about it, it's actually by taking one bank's proposition to another bank and see if they can undercut it. If they do, take that proposition to the other banks and see if they can undercut it, basically until they start rolling their eyes every time you walk in. Now this seems kind of boring, but this will definitely yield the best returns on your interest rate, and the interest rate that you will be paying on this credit is actually very important. Okay, this will determine like what cash flow do you have at the end of the month. This is probably the number one thing that you should be doing, is to try and get the best credit that you can. Now the way that I do it is I try to get my loans as big as possible. I've talked about this in the leverage video, but basically I always try to get like 30 to 40 years of loan with a minimum amount of fixed rate. The reason why I do fixed rate, even though it's a little bit more expensive, it's stable. I always know what my bank payment will be. Like, I don't care if the market shifts, the bank won't knock on my door and say, hey, you have to pay us more. Nope. Even with inflation, like, the bank will never increase the rate even though inflation is going on. So I'm actually betting against inflation. I'm making money on inflation. That's how great it is to have a fixed rate on your loan. Now the step number 4 is to actually make offers, and trust me, you will make a lot of offers. I usually make offers like on 100 properties just to get one, so don't worry if you get no's. That's how it works. You will be making a lot of properties, you will be lowballing a lot of people. Some people will actually get mad at you because they're asking for 50 and you're giving them 20. But in order for you to make money, you have to lowball a lot of people. Now maybe you're in this gold nugget like market where you can make money by buying properties at the least price, but for example in my case I can't. Okay, I always have to like undercut them by like 50%, and sometimes people get mad. That's okay by me, I completely understand their side, but I want to make money, so I have to undercut them, and sometimes the proposition has actually worked. Right now I'm looking at a property that is listed for like 20 and I'm going to send the proposition for 10. Okay, that's very low. Even in Portugal, that's very low, but this is ruins. Okay, like, I have to build the house again, basically. It's like, it basically has a front wall, and that's what it is. But I always have to undercut them because the market has climbed so much that it's not profitable to buy houses in this market. If I buy at the least price, I'm gonna lose money. So I always have to undercut them. So understand how much your property is worth, understand what the return you will have, and then you can start making offers. And trust me, you will have to make a lot of offers. That's just the part of the game, and hopefully you can get one accepted. Now, since I am a software developer, I actually created this small app. You probably can't see it very well in the camera. That basically lets me track my portfolio. I can add the expenses and whatnot. It tells me how much money I'm making. And when I am getting a new house, I just go to the calculator. I input everything on the calculator, which you can't see. Okay, like the values, the rents, everything. And it basically tells me how profitable that property is. I actually have like an older version of it in the Play Store, but it's not updated. It probably works, but it's not as good as the one that I have in my phone. I'll probably update the one that is on the Play Store if you guys want it. But yeah, this app is not necessary at all. You can use spreadsheets, whatever it is. It just basically automates a lot of the math. That way I just input a bunch of numbers and it just spits out if it is a good deal or not. Now, if you don't know what a good deal is, I will leave you the link in the cards of the 3-part video of my last deal, which is actually a 2-unit, and I have like part 1, part 2, the remodel of each of the units, and then the part 3 goes into the numbers of that deal. So if you guys want to watch that, the link will be in the cards here. I think it's here. I never know, but I think it's here. Now, step number 5, guys, you have to actually visit the property with someone who understands the insides of the property. What do I mean by this? You have to take people that go there and tell you, hey, the electricity is not well, hey, the plumbing is not well, we have to change this. So actually take experts and get inspections done. This is super important. Like most people, when they buy properties for the first time, they don't check the electricity, they don't check the plumbing, they don't check the foundations, which in Portugal is not a problem because it's not wood. But if you live in America, most foundations are built out of wood. Like it's probably rotten if it is a whole house. So always take someone who knows what they're doing and inspect the house, like everything, okay? You have to understand everything that you need to remodel, and only then you'll be able to say for sure if it is a good deal or not. Now, maybe you need to build the house completely. That doesn't mean it's a bad deal, but it will lower your offer on that property. And if you don't know, you're probably gonna lose money because maybe you'll get surprises that you have to change a bunch of things that you were not thinking about when beginning because you didn't do the inspection. So always do the inspections before buying a property. The step number 6 is probably the easiest. You just have to close on the property. This takes a lot of time because of banks, okay? If you are getting financing on that deal, you know, the banks will usually like take 1 month, sometimes 2 months to close on the property. It sucks, but since you have the property under contract, you know, it's not going anywhere. So as soon as your offer gets accepted, you sign a contract, you put that house under contract, and then you have to wait for the bank to do their part and give you the money to actually purchase this property. If this sounds scary, don't worry, this is super easy. The real estate agent will help you with everything you need. There's really not that much to it. It's basically you pay someone, you write the house into your name, and that's it. Now the step number 7 is actually optional, depends on what you bought. You have to do the renovation. Where you get contractors. This is a very problematic thing because sometimes even contractors that you have worked with in the past that were extremely good will mess up. Okay, like that happens all the time. It's super hard to get like a super consistent contractor that will always do a good job. So how do you get a good one? The way that I do it is usually just through word of mouth. I just find someone that had some work done and I ask them, hey, who do you use and did they do a good job? If they tell me yes, then I will contact that person to give me an estimate on the property. I usually do this before buying the property. Okay, I actually take the contractors in and I ask them for bids before actually making an offer on the property because I have to know how much I'm going to spend. But yeah, after the property is in your name, you can start remodeling everything you need. Don't change the plan, okay? I'll see a lot of people that will change the plan mid-term and then they will spend way more money than what they had anticipated, and that's definitely not something you want to do because you've done that math prior to buying the house and it can become extremely unprofitable very fast, okay? You have no idea how much money you can spend in a house. You can get super expensive flooring, super expensive everything, and adding a bunch of stuff that you didn't actually need. It's super easy to spend money on a house, like trust me, it's so freaking easy. So follow the plan that you got before buying the property, okay? Follow that. Now the last step is probably the easiest. You have to list the property. Now by now you probably know if it is a rental or a flip, especially because the renovation will change. If it is a rental, it's probably, you know, not as good looking as a flip. You will probably use like second line materials instead of first line because they're a lot cheaper and they look almost as good. So by now you probably have an idea if this is a flip or rental. And basically all you have to do is to list them. You can do this with a real estate agent or on real estate websites. It's up to you to decide. Mostly if it is a flip, you will do a real estate agent. If it is a rental, you can usually get it rented, you know, yourself on Facebook Marketplace, wherever it is, you can get a rental done. Facebook groups. Now, one thing that you should do in case it is a rental, you have to do some background checks. Now, for example, in Portugal, you can't really look into the past of each person, but you can access Facebook and see basically what they post. This is something that a lot of companies do, so why shouldn't you do it as well? Like, get to know your tenants, understand if they're a person that is going to trash the apartment or not. Now, sometimes you will misjudge a lot of people, which is not great. We always get like a first impression from people, and you know, if they're posting a lot of trash about landlords in their Facebook, and maybe they're not the right person for you to rent this place to. Now if they post photos on their house and it's clean, you know, they're a decent family, okay, these seem like nice people. Now in America you can do a lot more on background checks. You can actually check like the criminal history, you can check a bunch of things. I'm not the person to advise you there because again, here in Portugal we don't have any of that. All we can do is Facebook and Instagram. We can basically judge on what we can see on social media, which is not perfect, but sometimes you will dodge a lot of bullets, sometimes you will misjudge a lot of people. You have to play as safe as possible because this is an investment, okay? You're trying to make money from these. So if you are renting, getting the right tenant is like probably like the most important thing, okay? If you have a person that doesn't pay on time, that wrecks the place, you're gonna lose money. You don't want that, right? You don't want litigations. You don't want to take them to court. You want the process to run as smooth as possible. If they have some sort of problem inside of the property, attend to that problem. A window is not working or not closing, it's your fault, okay? You have to fix that. You want to keep the best tenants in, okay, for the most amount of time possible. And sometimes that will cost you a little bit more money on fixing the property, but you know, that's your job as a landlord. So yeah guys, hopefully this video helped you if you are starting in real estate. Now I know it's a little bit generic, but the process is kind of generic, guys. You have to look into the market, understand what type of properties you can get. Do you want to do flips? Do you want to do rentals? Try to understand what tenants you can get, the returns that you can get, and aim for those returns. And yeah, you know, there's not that much to it. It's a simple process that once you do it once, you will probably be able to replicate it like a million times. Now, every deal will have a little bit of difference. For example, the one that I'm doing right now, it's actually in the historical center of the city, so it involves the city hall because I can't change the appearance of the house without asking the city hall for it. And it has a lot more bureaucracy, so that part is a little bit different from previous deals, but everything else is the same. I looked into real estate websites, I made a bunch of offers, I met the agent, I visited the property with an inspector, which is actually my contractor. They went through everything. You know, you have to do this is the price, here's my offer. They accepted it and that's it, okay guys? Like, there's not much to it. The best way that you can go about it is to actually do it. And once you do it once, you'll be able to do it a lot of times. Hopefully you are ready to get your first real estate deal after watching this video, guys. Go watch some real estate, okay? Just open a real estate website and go look into some real estate. Go call some banks. If you enjoyed this video, guys, make sure you drop a thumbs up and I'll see you guys in the next one. Peace!